Hello, it's Jeffrey Cohen. It's August 16th, Tuesday. I'm an investment advisor representative with U.S. Advanced Computing Infrastructures, here to talk about the markets, here to talk about the massive bear market rally that we're going through. The markets have really lifted lately. And so I came up with my little cheat sheet on what's going to happen this morning and some key things. I'm just going to start by talking about those key things. And maybe we'll have a shorter discussion today, or maybe you can ask questions. We'll just see where we want to go, right? Where do we want to go with this thing? So, and as always, right, do due diligence, be really careful in the markets. We're fully invested right now in our personal accounts. We are not investing with the model. The model says it's all in, go for the high beta stocks, go for the large NASDAQ type stocks, go for money managers, right? Our model is very aggressive right now. And so I don't know if I feel that aggressive right now for myself, but at least that's where we're at. We ran our model this morning. I could take another look. So the model also says something very helpful. It says that the variance of stock market changes is going down. So we've moved from a period of a lot of volatility, a lot of up and down, to calmness, to a calm, steady rise. I don't know about you, but there's a saying that markets take an escalator up, but they take an elevator down. And what I would say to you is we're in the escalator phase of the market right now. And doesn't mean they can't take the elevator down, but we're just not there today, right? So it's also a very slow Tuesday in the summertime. And so you'd expect things to be a little bit slower. So let's go ahead. Number one, it's a slow, slightly down U.S. equities day today in a very broad-based market. So why do we know that? Well, when we look at futures, and I've got two sources of futures we could look at, we'll just look at the nice, easy graphical one from FinViz. Go to futures, and you can see the equities are down, between 0 and 0.11%. By the way, we are merry and bright this morning. We are happy. I've got my Harley Davidson hat on today, and at the end of the video, I'm going to tell you about my neighbor. Something COVID related that I think is pretty important for you to know. But we'll get into that later, right? Right now, we're focused on money. Gotta make that money. Oh, yeah. Big investment day today. So the VIX is stable at 20 and a half. I just find that so interesting, right? Because the market is frothy at 4,300. The S&P 500 at 4,300 is pretty high right now. We are in a bear market rally. We are in a bear market. And we are in a very aggressive rally. And so just want you to think about that, right? Because in a bear market rally, you would think that people would be buying insurance against a stock market fall. But you can see the VIX is down to 20 and is on a relentless sale or discount to buying protection against your portfolio. So why wouldn't you do it? Well, I think a lot of smart money is already levered up and bought protection at much higher prices against their portfolio. The person who buys now is buying it like the cheapest price. Well, let's be honest. If you've got money in at 4,300, maybe a little insurance doesn't hurt. And the way this works is that the insurance you're paying, the cost of it, you divide that by 19.2. And so you're roughly talking about a 1.05 daily move in the market is what's kind of that is what that is expecting and you're paying to insure against. Copper's not really moving, silver's not really moving, gold's not really moving, so nothing's moving. That's the point. Gasoline at $2.95 hasn't even moved a penny today. I mean, oil's up $1. It's no big deal. The interest rates are down ever so slightly. Are up ever so slightly. I apologize. That's different from what it was earlier today. So interest rates, 30-year bond is down 0.13%. The 10-year is down ever slightly. So So interest rates are up just a little bit. Equities are down just a little bit. And the US dollar is stronger. So I would expect, based on pre-market conditions, that markets will be lower today. So this is not based on our model. This is just based on kind of high-level observations, right? In my opinion, based on what I see this morning. So the S&P 500, it's not the spider. Spider's an ETF. But the S&P 500 is almost 4,300. That's pretty high. So Asian markets were down or flat, except for some of the smaller markets, which we like. Jakarta, Indonesia, Malaysia, New Zealand, South Korea. But in general, your major Asian markets were down or flat. Europe's higher this morning, between 0 and 1%. The US dollar's stronger. So I want you to think about that. When the euro dollar is going to come back and hit 1.0, that's sending a message to the market. That says that, Europe's not the place to hide right now. The US is the place to hide money. Right? Europe is a place to be worried about. Europe has droughts, and Europe has economic disaster, and Europe's at war with Russia. Right? And so maybe the trade's not so good. They're talking in Germany and Spain and places that they're going to set the thermostats to like 62 degrees this winter. Right? This is not, they're going to cut wood. Come on, I've been to Germany. This isn't Hansel and Gretel, right? You get a lot of people in Frankfurt. There's no trees. Maybe there's 4 trees in the whole neighborhood, right? They're going to cut wood. It's just a scam. They're talking about eating bugs in Europe, right? So Europe's having a hard time, and when the euro dollar hits and breaks through $1, that just shows you it's very tough in Europe, right? Their exports are going to be super cheap. Their stocks are going to be super cheap as an American, especially if you convert into their currencies and buy in local currencies. And so just want you to think about that, right? Bigger geopolitical things going through my mind, but that's not relevant for this morning. Bitcoin's at 24,000. I just find that interesting, right? Because it's been moving. It was almost 25,000, but it's solid. It's a solid upward movement like the S&P 500. So Bitcoin had hit a low of almost 18,000, and it's just been relentlessly climbing with small corrections back and climbing and corrections back and climbing. You can see the chart. However you feel about Bitcoin, it's holding its own. And U.S. Treasuries, it's interesting because when I wrote this, the rates were slightly lower, but actually now the rates are slightly higher. It's just not a lot of movement though. And so what I would say is you could stop the video now, go have a great day today, and just realize markets are going to melt down just a little bit if you listen to pre-market. So now let's go a little bit deeper and try to find out where's the movements. And so, are they in bonds? Look at that beautiful curve, inverted yield curve. So what that means, look at the short money, 2.27% for 1 month money. So what this suggests is, and it's not, you're not quite there yet, right? An inverted yield curve would actually be sloping down like a slide at a kid's park. This is more like a water. It's like when I ride my bike in the park. It goes up and it goes down. It's like these gentle hills, rolling hills. But what this is suggesting is that short-term money is becoming more expensive. It's not a long-term issue. Right, long-term rates are at like 3. That's the 3.1, 2.8, 2.9. This is not the issue. The issue is short-term money is becoming more expensive. Now, what causes that? Number one, the Fed tightening. Makes sense. There's articles all about it. They actually make a press release every time they raise interest rates. Got it. And there's going to be another meeting coming up, and they're going to raise interest rates again. So I understand that, right? That's going to prop that part up. The other thing that props that up, though, is stress in the financial markets. And we just don't see it right now. I don't see banks struggling to attract depositors. I don't see runs on banks. I don't see companies struggling to borrow money. Now, they're working a little harder. It costs them a little more. Right now, a stock that we follow is spending 8% and they're having to tap into their insiders. And they just paid a $600,000 fee to lower, to eliminate covenants through the end of the year. That's okay. I mean, that's not telling me money's tight. That's telling me money's expensive. Rates are coming up. And so if we see money become really tight, if we see signs of distress in the credit markets, that's when you're going to see this thing invert, and that's when you're going to see a recession. Because when money is expensive, you can still look to the stock market. Look, it's at 4,300, right? You can still look to the stock market to raise money. But if this inverts, and it's difficult to find money at the short end, you're going to see companies just shut their doors. You're going to see job losses. You're going to see corporate bankruptcies. You're going to see Chapter 11s and Chapter 7s where they just shut down. There's no money, right? We're not there yet. Credit is still plentiful. At least that's how I'm reading this yield curve, and I believe you should too. Now, if we look at the markets, we're still attractive. Corporate bond market, right? You're now over 2-to-1 advancers to decliners. That's attractive. Now, you're at like 1.3-to-1 new lows, new highs. You're pretty attractive here in the corporate market. There's strength in the corporate market. So a little more expensive, but maybe a little less fear. Now, there was something I saw. Broad-based rally. Now, what I mean by that, so fixed income, it's important. You have to follow the fixed income if you're going to follow stocks. They really do go together. So corporate fixed income, U.S., is up, looks like 2.3. 2.3-to-1. New highs. Oh, no. This is just, it's up. It's advancers to decliners. The advancers to decliners. And new lows are at 1.3-to-1 versus new highs. So you still have some market breadth issues, but on equities, you're going to see a different story. You're going to see a positive story. U.S. equities, 141 new highs, 45 new lows. That's like 3-to-1. We haven't seen numbers like that in a while. We've been talking a lot about 30-to-1, 10-to-1, new lows, new highs. This is a 3-to-1 new high to new lows. And you're also seeing that 80% of stocks are above the 50-day simple moving average. So people are making money right now. Their 401ks are going up. Their investments are up. Things are up. And it's so damn depressing out there on FinTwit. It seems like every other tweet is some market maven, some fake guru, some investment discusser who's saying that Rome is burning, everything's crashing, but why aren't they making any money? Well, they're not making any money because actually the markets have been rising for quite a while now, and you've been negative Nelly and you've been losing your shirt, right? Now, let's be honest. You look at the market and there's certain things that you can just see, right? Energy's down. There's no doubt. Energy's down, right? When you drive the price of oil down to $90 a barrel, you're going to take some of the profit out of oil and gas companies. That's fine. Got it. What else? Let's take a look for 3 months. You still see oil and gas a little weak. You see Amazon and Tesla have had an amazing run. Next Era Energy, Apple, The credit card companies, some of the banks looking a little bit stronger. Business to business is looking pretty good. Even the chips and dips sector is looking okay. I mean, Intel's down, but Intel may be a firm-specific issue along with Micron. Those are more your legacy providers. Look at Cisco down 6%, HPE, Juniper. So over the past 3 months, core tech is down. Large discount retailers are down. Your consumer defensives are down. So what's really up is Risk, Costco, Dollar General. Some of your home improvement, your restaurants, your industrials are up. So, I look at this and I think, and maybe this is worth even writing up, right? What I see in the market today is of course, we see energy down. Industrials are up. And risk is up. Look at that. Capital markets way up in the 3 months. That's what I see. I see business to consumer struggling. And maybe that's the story here. Maybe B to B is up. Industrial, there's something we already talked about that, right? B to B is up. I see lending is up. I don't know if that's a good sign now, right? Tech, big tech is up. Okay. What else do I want to talk about? This may be it. I mean, we'll look at interest rates. I like to do that. 1 month treasury bill is at 2.1. Look at it over the month. No change. So 1 month interest rates, no change. 1 year treasuries, not really a change. You did have a dip in early August, but it came back. So 3.26 on the 1 year treasury note. Probably a good number to remember. 2.8. So we did have a decline from 3% for the 10 year, and we're down to 2.8. So the 10 year is staying kind of solid at 2.8. The 30 year at 3.1 is up a little. It's down, it's up, but it's so 2.8 and 3.1. And if you look at mortgages, a little bit cheaper. Mortgage-backed securities, a little stronger, right? So it's good for the banks. It's good for your community banks. No new reading on the balance sheet for the Fed. Consumer prices up 8.5% year on year. We're still suffering, city average plus 9%. We did have month on month flat, but it's up year on year. Let's take a look at hospitalizations for COVID. Maybe I'll see that's down. It's way down. Look at that. 5,300. It's down 500 in the United States day to day. We're past our summer rally. So COVID's taking a little break. That's nice. It's just, we're getting used to it. So I do have a COVID story. So my neighbor, God rest his soul, Michael Ritter, he passed this past week. Wasn't that healthy. My understanding is maybe he had some habits, right? Smoked a lot of marijuana, drank, smoked cigarettes, right? So maybe not the healthiest guy, but saw him walking the dog all the time. He was out there. I never thought of him as sick. I just thought of him as maybe not making the right choices health-wise, right? But probably maybe 5 years older than me. Maybe not. I don't know. Hard to tell. And he died. He had his COVID booster, and he died. COVID booster, liver, kidneys, jaundice, yellow eyes, dead. A few days. I got my booster shot at right around the same time. I took a day off from my COVID booster. I want to say it was a Saturday. I slept in. I didn't feel that well, but I was fine. And I got the Pfizer. So I now have Johnson & Johnson, Moderna, and Pfizer. And the Pfizer kind of kicked my butt a little bit. It took me down for a day. I was fine after. But my neighbor passed. So it's interesting, right? So the booster simulates the effects of COVID on a system. And so instead of him catching COVID, he caught his body's response to COVID and it killed him. I mean, I guess we're living with it, but it's hard. It was not an old man. It was not a sick man. Smoked, drank, smoked pot. By the way, if you smoke pot, maybe you shouldn't. If you drink too much, don't. If you smoke cigarettes, quit. Because he's dead now. Had a nice wife. Had a nice wife. Nice dog named Harley Davidson. By the way, it's in honor of Michael Ritter's life that I'm wearing this hat. This hat I purchased in Colorado Springs as a much younger man. And I used to wear it in the heat. I used to go to a country bar. I used to work in the Springs. There's stuff out there, right? It gets hot. It's nice to have a hat on. And there's a Harley Davidson band on it in honor of Harley Davidson, the dog next door. So what else are we going to talk about? I guess we'll talk about what stocks are moving. So I will tell you that we own 3 stocks. So in the interest of not, 4, I guess now, in the interest of not having any issues, right? So we're short Hallador Energy. Hallador Energy just had their earnings, and it did okay. They've mitigated the risk of their going concern. They actually were at risk of having to shut the doors, and they did a covenant that the $600,000 they paid to PNC Bank to soften up a covenant. They have very little liquidity. They're hoping to ride the greater coal prices to profitability, but I think they're going to struggle. You have Corbis Pharmaceuticals, and Corbis just moves by like 10% in a day, every day. Moves up and down, but isn't going anywhere. A friend of mine says it's a zero. I like what they're doing. I don't think it's a zero. But the only way that stock's going to go up is if there's some news on the drug candidates that they're developing, and that's not a financial thing. That's intrinsic. American Shared Hospital Services were long. The stock has been going up. They had earnings. They make a profit. They make a nice profit. They had an 8-cent profit this last quarter. It's up 100%. On 12.5% higher revenue. And they're pushing hard to grow revenue even more. Their story is a growth story. They have plenty of liquidity. They restructured their financing, renegotiated all their agreements. They've got $1.91 on the books right now, cash, ready to lend. And what they do is they put in the big radiological systems into hospitals, whether it's a Mevion, whether it's a Gamma Knife, or linear accelerators. I mean, they do that kind of stuff. And they put them in, and then they share the risk of consumption, of utilization, with the medical entity. And so I could just imagine, right, in where I live, right, North Shore, you're probably not going to have to do a deal with the North Shore hospital system, like the hospitals in Highland Park and Lake Forest. They seem to be pretty well capitalized, or the Children's Hospital in the city. But as you come out closer to the Wisconsin border, you're still Lake County, you're still solid, but these areas maybe aren't as wealthy. Or maybe you go down to Southern Illinois, where it's definitely not as wealthy, but you still want advanced care, and you may not want to have your patient drive 160 miles from Bloomington, Illinois to Chicago. It's a little inconvenient. I used to make that commute when I worked with country companies. And so, you know what? You put a proton beam system or a Gamma Knife system down there in or some kind of a radiological system to treat cancer down in Bloomington, and maybe AMS shares the risk with the local hospital. That makes sense. Their proton beam radiation therapy system that they own is in Orlando, which is great because people fly in, maybe they get their treatment, maybe the family goes to Disneyland, right? And so that you probably put one in Vegas as an example. People want to fly in, take care of it. I'd love to see AMS grow their business even more. They are positioned for profitable growth. And then QBTS, we own a little bit of D-Wave. We own the warrants. We like D-Wave. I use D-Wave. Why not, right? So let's take a look at some stocks. Markets can open in an hour. Where's the action, Jeffrey? Show me. Where's the action, right? And don't show me where Yahoo says the action is. Show me where you think the action is. So pre-market, there is no action on our stocks. I got to show you this tweet. So yesterday I tweeted the Cohen of shame. No, not this one. I'm going to go this one. The Cohen of shame. And part of it is, we sold our Verizon, and I worry that maybe we sold it too early, but I'll take it. I do not like the Cohen of shame. And what I tweeted is how I feel when all my funds are invested and nothing's moving. It's true. You put a lot of money to work, right? You work your tail off. You do your due diligence. And then all of a sudden, your plays take 6 months to a year. Now, that's okay. I can wait 6 months to a year to make 25%. I'm good with that. It's just challenging sometimes, right? And so let's take a look at what we call the walking wounded. These are stocks that, generally speaking, haven't been doing that well or have been just soaring crazy higher recently. And so I'm sick of talking about EJH. If you've listened to the show before, you know that they are a Chinese at-home service provider. They also just bought a drug company that makes drugs. One lady owns the company that makes the drugs, and pharmaceutical grade, leading drug manufacturer for like $8 million. So my guess is it's not like they bought Abbott. They bought some lady's, drug company. They also offer sister-in-law services. I've never had anyone explain to me what that is. But they paid her in a lot of stock, and I had a feeling that she might have sold the stock, maybe even in anticipation of getting the stock, and drove the price down a bit. You're 27 cents. Atlassian, so what's moving, Jeffrey? Quit with the chit-chat. Chitty, chat, right? Nothing's moving. It's boring today. The stuff that's the walking wounded isn't moving. Let's look at regional banks. If you guys ever want to work together on banks, I'm happy to, but that's a private thing. That's not just a giveaway on the videos. But these are all the banks that we track, regional banks. FFIN, down 10% pre-market. Not surprised. Who knows if it'll last? Carver, they're just in trouble. Broadway, they're just in trouble. So the weaker banks and the larger banks are down this morning. Citigroup, Bank of America, Wells Fargo, PNC, U.S. Bancorp. So like your maybe 2 through 8, 2 through 9 are down. And a very, very expensive First Financial. I think it trades at 4 times book. My calculation, 5 times book. Yahoo's calculation. And then what's up are the small guys. There's a Bank of Hawaii, right? Financial Corp. The smaller of the two. First Hawaiian. Must be good. Must be a good real estate market. Ally Financial. Bank First. That's an expensive stock, though. Bank First. I think that one's just running. That might be worth a chit-chat. Call me if you want to talk about Bank First. Don't bank second. Bank First. Right? They're trading at 3 0.25 times book. And there were some other things about them that I had noticed. Cash is always king. It's interesting. So this morning you got some stocks up. All right. Who knows how much volume, right? So the banks, interesting. Money managers, right? Mixed to down. So it's not a healthy day today. It's not a bad day. That's why I say that. It's mixed. It's mixed. It's mixed. Specialty retailer. How's the consumer today? Pre-market. Well, Bed Bath & Beyond has been memed. BBBY. Newell, which makes me shiver. Q-Rate has been kind of memed, kind of driving up. But so some of the aggressive stocks are maybe taking a little bit of a breather. Party City's up. We went to the other one, which is Spirit, Halloween Spirit. And that one looked pretty healthy. The one store we went into, it's not really a... But I don't know, maybe Party City makes it another year. It's already almost Halloween. Let's see. Walmart is up pre-market. Target's up pre-market. So Walmart must have had good earnings. Yeah, Dow Jones futures flat as Walmart jumps on earnings. So I'll have to take a look at what the Walmart earnings were, how to read them, how they read through the market. So that's interesting. It's good. It's good. It means maybe the consumer's not as dead as we thought, right? Pre-market, coal is up. Coal looks good today. It's a high energy day for coal. That was a really bad pun. I'm so sorry. Pre-market on the physical miners, pretty much all up. Whether it's gold, copper, iron ore, whether it's making steel, they're all up this morning. They look good. Bitcoin, depends what part you're playing there, but mixed. The Bitcoin industry right now is mixed today. Cannabis and tobacco. It's interesting. The larger caps are not doing as well as the smaller caps. Let's sort it by market cap. There it is. So your higher market caps are not doing as well. Your lower market caps, it's just mixed around. But the bigger plays are maybe showing the most weakness. So that makes me think of something very interesting, right? Because if larger caps are weaker, smaller caps are up in general, that shows that maybe there's a liquidity day. People are going to try to distribute. They're going to try to sell. Raising money today. Could be. Chips and dips. Manufacturers. Rackspace, Cisco, Microsoft, Apple, IBM down. Hewlett Packard Enterprise up. Dell is up. Oracle's up slightly. I don't know. I think this is a market where you're going to flip a coin. Go back to regional banks. I love the banks. I've been learning so much about banks these days. We're going to take a look at FFIN. It's weird that it would be down 10% pre-market. That might be just a bit of an overreaction or just low volume. So one of the things that I realize is that you get people painting the tape. I see it. I see it all the time. Yeah, 2,000 shares down 10%. That could just be somebody takes out a brush and starts painting. Here's the thing. For 2,000 shares, you're going to give back, let's say, up to $5 a share. So for 10 grand, you might have a position in First Financial, and you don't like it at 46.50. You're nervous. Maybe you're short the stock, and maybe Vito is coming with his leg breakers because he wants you to cover, right? He wants you to cover. He's like, hey, what do you mean you're short First Financial? The thing's at 46.57. You're one of those chitty-chatty guys on FinTwit saying that Rome is burning. Well, Rome's not burning. I want my money. Well, look, it traded as low as 42.12 this morning. Give me another chance. I need a few more days. Yeah, well, that's what that could be on 2,000 shares. I love it. I've seen stocks move on 3 shares. WBD is interesting. That's a stock I want to talk about for a minute. WBD. By the way, who's WBD and why do I care? Warner Brothers Discovery, spin-off from AT&T. Look at that thing. That's an open mouth. That's pain. That's pain. That's pain. Do you know why? It's because they're not making any money. They're so woke that they're canceling movies. They're canceling movies because people don't like them, and TV shows. They're blowing it. They're blowing it. And so the question is, how much more time do they have? I don't think Warner Brothers Discovery goes anywhere because there's money to be made in the content industry. Disney is moving the other way. And there's no one more woke than Disney. Oh boy. But even that one, right? That one's at least been making a bit of a recovery. Up to 20-25% from the low. Right? So Warner Brothers Discovery is a real bet on... So I'm looking at this stuff. What the hell is this? Pink? Men wearing pink with bright green. Maybe that's what you need me to wear. Maybe tomorrow I'm going to come to you in pink and bright green. You know, I don't think so. And I'm not in Hollywood, so maybe you don't like that. So where are we at? We're at a market that is flat this morning. We're at S&P futures flat. We're at interest rates flat. We're at the VIX. It's not up. The VIX is flat too. I don't know where we're at. I guess today is a stock picker's day, right? So maybe this is when we have to look at our saved screeners and say, all right, what's up, what's down? But you see, this is how we used to do it. We could pull our run. Hang on, I'm going to protect some of my secret sauce here. And we're going to take a look. So let's say you wanted to bet against this market. We're going to take a look at our down run. And we're going to see, what would you short today? What would you throw out today? Move it to the desktop. I got a lot of stuff on my desktop. It's pretty crazy. Let's take a look at the down run. Let's share some inside baseball without actually showing you the picks. I may show you a few picks, just because I'm that kind of guy, right? So, you know what I'm going to do? I'm going to end the video, and then I'm going to start a new video with some of the down run. So I want to thank you for watching. I do. I love you guys. I really appreciate that you watch the videos. I like it. I think it's great, and I just really appreciate it. And if there's anything I can ever do, I want you to reach out to me. So if you go to Twitter, it's Chicago_Quantum. Chicago Quantum. That's us. Chicago Quantum. Chicago_Quantum. If you ever want to go to the website to find me, this is www.chicagoquantum.com. www.chicagoquantum.com. And you can do contact. Just press the button. Call. Email. You can download the brochure and all that, but that's not what I'm talking about. You can follow us on Twitter this way as well. So just give me a call. This is my personal cell phone. It rings. Now, usually I answer, it's Jeffrey Cohen, Chicago Quantum. How may I help you? And most people just hang up because they're robocallers and they don't know what to do. But if you're a real person, don't be afraid of a little bit of an aggressive answer. Hey, Chicago Quantum, what can I do for you? Right? Because I get a million calls and a lot of spam. But just do it. You could write us a letter if you want. I don't care. I love it. Send me a letter, right? I check my mail. And just let us know what you want me to do. How can I help you, right? And then what I ask you to do is if you go over, after you're done watching the video and you like the video, let's see if I can do this. If you just go to the channel, there's a button that says subscribe, please. Look at all those videos I got. I don't even know how to show you. Here. Math and Tech Talk. Video link.
Yep.
So if you watch the video, usually there's a button that says subscribe somewhere. Just hit the button. It really helps us. We don't have a lot of subscribers, but it really helps because what happens is you watch the video, you subscribe, you get an email if you want that tells you when we're online because we're not always right at the same time every day. I try, but a lot of times there's a little extra prep we have to do. And it lets YouTube know that people like it and that it's interesting and it's trusted and that people watch it, and then it recommends it to other people. So we don't pay to advertise our YouTube. We don't pay to advertise our website. We don't pay to advertise our Twitter. We just go out there and communicate. And so it helps us. So please subscribe, hit the button. You can even turn off notifications if you want. It really helps us out. By the way, if we get from 304 subscribers to 1,000 and we get from like 50 views a day to 500, then I can get free coffee from YouTube, which is pretty cool, actually. I'd like that. So I could buy my own coffee, don't worry. But I like getting free coffee. So if you do that, that'd be really helpful. And then that gives me reinforcement to make more videos and to do even more prep. So thanks very much for watching. Leave a comment as well. We like that. And good luck in the markets today. Just be safe because the market's been going up like crazy. Really, really, really going up. And so look at that upward trajectory. Just be careful, right? I mean, and I would say trust the market. Listen to the market. Don't fight the tape. All right, you take care now. Bye-bye.